questions too about people sort of, raising their eyebrows at the employment numbers, and this is an interesting one from.
I wonder why.
Dave Sebastian. He's like, unemployment. The labor participation level saw a sharp bump, rising to 61.5%, which brings it to 1.9% below February's level a month before the shutdown. And his question is, how can that be correct?
It's not.
And that's the whole point, I think, with these numbers.
I can guarantee you this, and I don't know who, and I don't know how. It's like the old massage parlor turn off the music example I gave you last week. You know it's happening.
No comment.
And again, no comments, right? Just silence. A moment of silence for that. Then we come back to reality, and we're like, somebody who knows something about how Wall Street reads headline economic data, maybe a guy that used to do a little coke, that used to be a big sell-side strategist, used to have his own TV show, kind of, who's that guy? Are they moving the numbers around a little bit to take advantage of people who are just blatantly ignorant, and or the people that are paying him on the side and otherwise, or their network to get advertising dollars? Like this is a massive web, okay? So your point is very well taken. That's why I just went to the rate of change of jobs growth. There's no debate about that, okay? There's no coloring up of headline news. There's no politicization of those numbers. It's just the rate of change. It's the rate of change. That's all you need to know. Is it the rate of change? If it remains negative, and by the way, it's going to go more negative. McDonald's is closing the restaurant part of their stores. And my brother is a McDonald's franchisee, just to give you that information. I think some people are like, why is he talking about it? I know how the math works. When you close the stores, and you really have to have your brother to own these stores to get this point, you fire people, okay? You got that? Okay? So now we're going into phase 3, which is not only the companies that were levered coming into it, that took on more leverage, saying, okay, we'll extend this, but the deal is that if you don't keep your people on, you are now levered. You don't get that PPP money forgive it, right? We're going to have a more levered corporate America with less jobs again. So I think that that's the reality that the market sees. If the market didn't see that, the 10-year yield would be at 1.3% this morning. Yeah, if the market believed it was a jobs boom, like a quad 2 jobs boom, where the rate of change of jobs growth went back up to 1.5%, going to 2 to 3% growth, that would be short gold. Gold would be down, limit down, whatever that is. I don't think gold has limit down days, because nobody needs to protect gold. It's not centrally planned like the stock market is. So again, I think that's probably the best question of the queue. Thank you very much for that.